help guide businesses and their auditors, P&A Grant Thornton held Part 1 of the Transfer Pricing Concepts and Documentation Requirements webinar series last January 27, where partner for tax advisory and compliance and head of the transfer pricing team, Nikkolai Canceran, and tax advisory and compliance manager, Arianne Mandac discussed transfer pricing concepts and methodologies, tax-driven schemes to minimize tax payments, and documentation requirements.
Transfer pricing is a pricing of cross-border transactions or intra-firm or domestic transactions between related parties. Two or more parties are related if one participates directly or indirectly in the management, control, or capital of the other. The arm's length principle is internationally recognized standard for transfer pricing. It requires that transaction with a related party should be made under comparable conditions and circumstances as transactions with an independent party. Related party transactions also include intra-group services. These are activities provided by one party within the group that provides benefits for one or more other members in the group. There are 5 transfer pricing methodologies. Number 1, comparable uncontrolled price, resale price method or RPM, cost plus method, profit split method, transactional net margin method.
The concept of substance over form as applied to financial statements is nothing different when it comes to transfer pricing. Related party transactions or controlled transactions that are reported should be those that are actually undertaken by the taxpayer. Losses are inevitable. Business entities incur losses for a variety of reasons, such as startup losses, market penetration strategies, and research and development failure. The local file or a TPD that is prepared following the requirements of the local tax regulations is still preferred because it contains more detailed information about the specific intercompany transactions in which the domestic entity is involved. The tax authority is really keen on improving and strengthening its transfer pricing risk assessment and audit. Probably the question most of you, if not all of you, have in mind right now is the BIR already very active in conducting transfer pricing audits? Given that they already have this more detailed transfer pricing audit guidelines or the RAMA 1-2019 and all these requirements to submit RPT forms and prepare TPDs for some taxpayers.
So I'll be asking Nikkolai to answer such question now. What if the related party is a monopoly in the market? What will be the comparable? I'm just curious, does the BIR have database used in upcoming or coming up with their arm's length range that will be compared, of course, to the taxpayers' results of transfer pricing or the taxpayers' benchmarking?
Be in the know about the recent developments in transfer pricing and related party transactions. Register now for our February 8th session on transfer pricing and get practical tips and insights straight from our experts.